Well, it's time for closing trades on ET now. I'm Anisha Jain. With me is Aisha Faridi. And the biggest talking point as far as closing trades is concerned is the cement pack. That UltraTech cement earnings really putting quite a bit of fireworks at place as far as the entire cement pack is concerned. UltraTech is up a solid 6%, but it's taken along with it Nuvoco Vistas, JK Cement, JK Lakshmi Cement, India Cements, Birla Corp, Grasim. All of the cement pack has suddenly shot up quite sharply. So some of these names at the highest point of the trading session. And why exactly is that? What are the internals of UltraTech Cement telling us? Let me take it across to Sharat to get more details.
Of earnings coming from UltraTech Cement, and this has been a beat on all estimates which the street was actually figuring out. Also, interestingly, if you look at the volume growth, that has jumped almost 10%, and the grey cement, if you look at it, that's also jumped 9% on a year-on-year basis, beating analyst estimates as well. The interesting number is the EBITDA per ton. Last quarter, the number was 725 rupees, and there was a significant jump of almost 964 rupees as the EBITDA per ton. The estimate in the street was ranging between 930 to 940 odd. So there has been a very strong beat when it comes to the operational numbers. But what led to the strong operational numbers? This is of course the fuel cost. Interestingly, that has fallen 4% on a sequential basis. That actually aided the margins and also the operational leverage which has kicked in, and because of that we are seeing strong numbers in the bottom line as well. Apart from this, company stated in this press release that they have achieved a capacity utilization of 73% during this quarter, and interestingly the realizations have also come better than the street estimates, jumping almost 1.5% sequential basis due to the price hikes which were taken in the third quarter. Now, two important pieces of commentary also coming in, and that is encouraging not only for the company but for the industry as a whole. They expected to generate a sustainable volume growth of 7 to 8% on a year-on-year basis, and also they're confident to reach the 200 million tons per annum cement capacity by the end of FY27 as well. Of course, Dalmia Bharat also came out with its numbers in the con call. Also, that stated that price hikes would be coming in certain regions in the month of January and Feb as well. But also three important transaction updates, and that is something which I would like to point out. For the India Cement deal, the enterprise value is still being actually taken care of, and they might be adjusted, especially after the completion of the divestment of the non-core assets. Currently, the EV number is coming at 12,075 crores, and Kesoram Industries still awaiting the mine transfer approval from the state authorities of Telangana and Karnataka, and these numbers will be given a retrospective effect in March. And lastly, Star Cement company has given a status quo kind of an update when it comes to acquiring the non-controlling asset of almost 8.5% in Star Cement with a totaling of 776 crore rupees. But all in all, strong earnings, strong management commentary. But of course, we'll be looking at the con call where we'll get more details, especially when it comes to the pricing trends and how the demand and competition is panning out for the cement industry.
Things looking up for the cement industry for sure. Sharad, thanks for that analysis of UltraTech numbers. But are they looking up for the world and growth and equity markets? Who better than Alicia Berardi, Head of Emerging Markets Macro Strategy Research and Amundi Investment Institute, joining us to throw light on exactly that. Alicia, great to have you on the show. Let's first talk about what's happening in the US and what the Trump 2.0 regime is going to mean for the world and, of course, the US dollar.
Thank you for inviting, and happy to be back to talk to you guys after following and participating to the CFA, India CFA Society conference 10 days ago. So, yeah, interesting times. We had the inauguration. So let's say we didn't have the first day actions that some were expecting, so a sizable number of executive orders, but the agenda is very well alive. So trade, immigration, tax deregulation, these are the priorities of the administration, and we had first sign of these priorities coming up. So we had the interest of the authorities is concentrated towards the neighboring countries, so Mexico and Canada, China in terms of trades, policy memo on trade, but maybe you are alluding to the fact that one of the most important aspects and announcement was related to the Stargate process, so continuation of policy towards support towards strategic sectors. And this is important for the equity market in the US and for a continuation and persistent US exceptionalism.
But Alicia, is it also going to translate into a continuation of a stronger dollar, or do you think that may peak out sometime this year?
We do have some expectation that the strong dollar will remain, even as a consequence of some uncertainty attached to the unfolding of the policies, right? Because we do not have yet a clear path in front of us. Having said that, we do expect that the US dollar is going to depreciate moving further during the year, and indeed our targets is for higher level, for example, against the euro. We do expect US dollar getting higher towards 110 by the end of the year.
That's the view as far as dollar is concerned. Hi, Alistair. This is Anisha also joining in the conversation. Wanted to shift back the focus of the conversation to India a bit, because we have been seeing an exodus when it comes to the FII flows from India, part of course on account of the dollar strength that we talked about. When do you anticipate a reversal? Because growth is moderating a bit. Is that something which is concerning the foreign investors?
No, you are perfectly right, and you are exactly spot on the two aspects, because when we look at emerging markets, and India is an example in case, we look at global financial conditions and we look at domestic conditions. So India and equity markets in general in emerging markets needs to see more appetite towards emerging markets assets by global investors, and that has a lot to do with global financial conditions easier than what are right now, and that relates to dollars, yields, and Fed policy expectation, I would say. Not only to policy making by the US administration. On the other side, the other aspect is more domestic. And thanks God, India is a country, is a market that is very much domestic oriented, and growth earnings perspectives are what they are relevant together with valuation. So we have more appealing valuations. I don't expect that the trend for growth in India will go down. So economy moves in cycles. 8% maybe was a peak of a cycle. I don't expect growth in India below 6%. So again, I do expect growth recovering in India, and between 6 and 7% is a sustainable level, considering the economic conditions. Therefore, earnings returning, better valuation, the rating of the valuation that we have seen more recently are drivers supportive for the Indian equity markets moving forward.
Point taken. So you're talking about how India is a domestic economy, and that of course is working out well. But if I have to zoom out and look at India in a global context, does it feature high in the pecking order of an ideal investment allocation?
Say yes, for partly for the reasons that I've said before. A growth that is between 6 and 7% with the earnings expectations that are still there, even if they've been declining. India is standing out across emerging markets and in general across the world in terms of bright spot. And in terms of global perspective, when we rank countries' vulnerability, even vis-a-vis new changes in trade or, let's say, external shocks related to a new wave of tariffs at global level, India again stands out as an insulated country and therefore a safer country. And in this sense, so external vulnerability, but even domestic resilience make India still a very appealing story.
Alicia, in the very near term, though, while India has always been known as a consumption economy, their entire consumption theory has gotten challenged. I mean, not just that the stocks are overvalued and overheated here in India within the listed space, but also that there is a rural as well as, signs of an urban slowdown as well. What do you think is going to be the next theme for India investment?
I think one of the most important theme, in the short term, we will have the budget presentation soon. Again, the budget, I think, will continue to show the same kind of messages. Fiscal consolidation on one side, but support to growth on the other side. And growth support comes not only through capex that I expect will be confirmed again in the new budget, but going towards what you were saying, I expect more support even on the consumption side. So income tax tweaking, so this kind of measures that can be highlighted in the budget will show the commitment of the government to support growth not only through capex but even through consumption. And we have been seeing already a sign of a more comprehensive support to the economic growth, not only related to capex, already in the past fiscal figures.
What do you think of the growth versus value conundrum right now, Alicia? And if you had to, recommend in terms of putting money to work somewhere, what would be the right asset allocation this year? Because it's going to be a lot more volatile, at least the way 2025 has started so far.
No, you're perfectly right. So our outlook for this year, indeed, not by chance, was titled Bright Spots in a World of Anomalies. So we are in a late cycle phase. We still like risky assets, credit, equity, income opportunities, so emerging markets, bond. But there are a lot of anomalies. So this year will be a year where you have to play more dynamic allocation, and you need to reconsider and to reassess the macro framework quite often. That means that during the year, even strategies like risk diversifier strategies related to risk on liquidity, on higher volatility, macro and geopolitics will be necessary in your asset allocation.
For far long, or rather last 6 months at least, people are really sort of betting on China as a bottom-up story. Now with the tariff implementation of 10% from Feb 1st and always this sort of overhang and threat looming over China as to what's going to be Trump's next move, tell me whether that entire rationale gets challenged, and is China a clear avoid then?
Yeah, the policy pivot that we have been seeing in China late last year, around October, is still very much there. So we don't think that the story has ended last year. So we will have more details at the beginning of this year, maybe in March at the next relevant policy meetings, and in particular even more when we will have a clear approach, a clear stance by the U.S. administration. So there is clearly no doubt on the fact that China is ready to put more money on the table, either because the economy has been suffering, particularly the domestic part of the economy, either because now you have to face and to offset a possible external shock. So in this sense, we have seen some, let's say, cyclical rebound in China end of last year and somehow even beginning of this year. Trade numbers were good, not only in terms of exports, but they were good even in terms of imports. So meaning that a cyclical rebound was actually there. So many parts are moving. Fiscal package and fiscal stimulus will be probably one of the catalysts to look at for investing in China.
So just before we let you go, we talked about how budget, of course, is a big event to watch out for in India. But for the global markets, the US Fed decision and the central bank trajectory also remains important. I think the US Fed meeting is lined up for 28th, 29th. But a large part of Street is now penciling in a shallower rate cut and a slower rate cut cycle. Are you part of that consensus?
Let's say that as Amundi Institute will remain more dovish than the markets, so we do expect the Fed cutting more than what the markets is discounting right now, and this is consistent with our macro backdrop of some normalization in terms of U.S. growth moving towards the potential and inflation moving finally closer to the target.
Okay, Alicia, on that note, we'll let you go. Really appreciate you making time and speaking with us. So that's the latest coming in from the House of Amundi. They are saying that growth is normalizing in India. But of course, 8% was a bit of a peak. 6 to 7% is something that might just continue. And the government's focus on fiscal consolidation as well as infrastructure development and consumption is going to be the biggest driver. On that note, we'll slip into a very short break. Don't go anywhere. Last 45 minutes of the trading session when we come back.
Back with closing trades, right here in ET now, just very muted, 75 odd points higher. Today, of course, the flavor is IT sectorally. Other than that, that big fillip from UltraTech Cement, which is, of course, running off on rubbing off, not running off on some of the other cement plays as well. Trent has made a little bit of a comeback, a smidge at that. M&M is holding out okay. There's Eicher Motors, which is up in the green. JSW Steel, Tata Motors are some of the other names which are looking quite okay. Coforge Persistent, of course, got a good fillip after their numbers. Those stocks looking good. KEI holding up 9%. And then Pidilite as well in a post-earnings reaction. That stock also holding up 5.5%. Let's welcome on board then our chartists and figure out what they've made of the trading day so far. Kunal, a very individual stock-specific, earnings rub-off within the sector kind of day, or days I should say, at least last two. But what's that telling you about the overall market construct?
So it indicates that the markets are not yet into a big breakout or a very strong rally kind of a mode. And I think with this individual stocks picking up pace, it just keeps the short-term aspect for the index into more of a consolidative range. So we were discussing in the morning that 23,000 should act as a base or a pivot for the index, and on the upside 23,500 should act as a major resistance for the Nifty over the near term. And I think with the India VIX now stabilizing at the 17 marks, sub 17 levels, we could probably be at a point where the 23,000 mark or maybe 50 points, 100 points from those levels should act as a major support, but 23,500 on the other end is acting as a major resistance. So I believe now, and especially with the next 1 week, which is the expiry for the Jan series, the action could start to shift more towards being stock specific. But the index, I believe, could continue to remain to this range, including some bit of volatility what we've seen over the last few days.
The interesting bit today is the broadening of the rally that we have seen, and especially these 2-3 segments. The cement as a pack is very active. Apart from UltraTech Cement, you also have JK Lakshmi Cement, Novoco, Grasim, Shree Cements. They've all seen a shot up post the earnings of UltraTech Cement. The other pack, of course, since the start of the day has been IT. Coforge, Zensar, Emphasis, Persistent Systems, all of these stocks are doing very well for themselves. And then some of these manufacturing themes which are beating down. So Amber is perking up, KEI is seeing a delayed result reaction of sorts, Keynes Technology is higher. So some of these names are definitely doing well. Within these 3-4 pockets, Naresh, if I had to ask you to recommend top bets within cement, EMS as well as IT, which are the top 3-4 names?
So would go with IT and cements, would avoid the EMS space as a whole. So in IT, Wipro looks interesting for 2 reasons. One, post earnings, the reaction has been positive. And also the stock is much lower than where it was in 2021. So it's not been a major outperformer. So out there, Wipro is interesting. And Infosys, where the longer term structure is positive, eventually could be the leader in the large cap space. Then going into cements, would look at Ramco Cements, which had earlier made a breakout and it's at the same prices right now. So at 910, 920, Ramco Cements looks the most interesting. And second would be UltraTech on dips.
Polycab is the other one. Of course, very positive notes coming in from the brokerages after their numbers. Jefferies is maintaining their buy. Morgan Stanley maintaining its overweight. Macquarie as well maintains its outperform. And Citi maintains a buy with a target price of 8,600 on Polycab. That's where the stock is currently about 1.5% higher in trade. Kunal, map the charts for us for Polycab, given that it's not fallen a whole lot in the recent market correction.
Yeah, I think Polycab is something which has been looking attractive on the short-term charts. In fact, over the last 3-4 months, the stock was had been absolutely resilient. I think if you look at the last 1 week, 10 days, that's where the stock corrected, this 10%, 15% from 7,000, 7,500 levels to now 6,200, 300, where it's trading right now. So I think a major part of the correction has happened in the last, 1 or 2 weeks for the stock. But then other than that, the stock had been absolutely range-bound, positive, relatively strong with respect to many of its other peers. But, in the last 10 odd days, with this correction seeping into the stock price, it's also dented, the near-term prospects. So what's happened is that the stock has now come back below its 200-day moving average as well as sub the 50 DMA. Now these could act as pressure points for the stock price whenever it goes into any kind of a bounce back or a rally mode. Like what we've seen today, for example, the stock opened up with a positive gap up, moved towards 6,400, 500 zone, but it could not sustain those kind of highs. And from the intraday highs, you're seeing the stock coming back into some bit of selling pressure or profit booking. So I think we could now be accustomed towards these kind of short-term moves for Polycab. And the stock from 6,500 levels, 6,600 could be a resistance. And on the downside, we could expect the stock to retest 6,000 plus mark.
Okay, so That's the latest coming in on Polycab as far as that entire cable segment is concerned. But Naresh, before I move forward, a quick word on some of these insurance plays. Go Digit as well as PV Fintech doing quite well. I know we have limited history, but still, any comments?
So GoDigit post the IPO made a low around this 275 to 80 mark. That is where it has bounced back from. But on the higher side, 330 to 350. 350 rather is a stiff resistance. It has been there for the last 2 months. So looks range bound. PV Fintech for now has broken down below the recent last 3-4 month lows. This is an indication of a pause coming in play. We may hold above the 1500 mark, but 1850 and then 1950 would be a stiff resistance going forward. So it could get range bound in the 15% range for the next many weeks.
Coming in as far as some of these insurance plays are concerned, but the world has come together at Davos, where they're of course discussing how the future outlook of the world economy is going to be like. And of course our team managed to catch up with a couple of corporates. Here out what they had to tell us.
We are at World Economic Forum Davos. I have a very special guest with me who is part of the Global Young Leaders Forum of WEF. I have Shashwat Goenka with me, Vice Chairman of RP Sanjeev Goenka Group. Thank you so much for joining us, Shashwat. And how's your experience? You are coming after a while, and obviously you are part of the Elite Global Young Leaders Forum. What is your key takeaway from Davos this year?
Thank you so much for having me with you today. It's been a wonderful experience. It's my first time actually in Davos. And I think it's been phenomenal because there's been a lot of talk across industries, across topics that cut across industries, right from AI to the energy transition to the future of media. And I think these have been very engaging, very enriching conversations. A lot of takeaways that we can apply to our businesses, a lot of takeaways from leadership lessons point of view. So all in all, I think it's been wonderful.
There's a lot of thrust on technology. There are emerging technologies, AI, robotics, blockchain. So how are you sort of looking at it, considering that you will also look at future technology? So what is your key takeaway on that?
So I think AI is now, it's like what technology or like what digital was 10 years ago, right? It's not an option. It has to be the core DNA of whatever it is that you're doing, whatever industry you're doing, right? And AI is not here to replace jobs or replace things. It's about how can you use AI to kind of further your business and grow it a lot faster. And for us, across our businesses, we are looking to do that. So one of the businesses we are looking at AI in a very big way is our IT-enabled services business First Source, where we are transitioning the entire organization to become an AI-first organization. And I think there have been a lot of interesting conversations here which have happened around AI, and I think a lot of takeaway for me to apply to that business.
All right. Are you looking at venturing into some of the new areas which you might have explored here?
We're looking at a series of different areas. In terms of, we've already identified a couple of new areas, which I will talk about a little bit later to you when they're a little bit more baked, the ideas. But what's reassuring is a lot of those ideas have been discussed here as well. And so definitely we know that we are on the right path.
I came across so many young Indian entrepreneurs, who are working in future-ready sectors like AI, tech and all, and they're part of global delegations. So India is the buzzword here at Davos.
Absolutely. India is the buzzword in India. India is the buzzword globally. And I think there's no taking away from that. We have the highest population. We have the youngest demographic dividend that we can reap. We've got the best policies in place and continuously being put in place. And we've got superb and healthy competition within the country. So I think there is no taking away that India is the future. India is going to be the future. So very, very excited.
Budget is around the corner. Any key expectations from budget?
I think what's happened with the last the last 2 times of the Modi government and now the third time is there's been significant consistency in all the announcements that are made, and each budget builds on the previous budget. So I think this budget is also going to build on what was said in June, July earlier last year, and very, very excited because the budget looks at all strata of society. It looks industry agnostic to everybody, and I think it will be a budget which will focus a lot more on consumption, and we are very excited with that.
Awesome. Thank you so much, Ashwas, for joining us.
Well, joining us here on Times Network is Mr. Sai Prasad, who's the Executive Director of Bharat Biotech. Thank you for speaking to us. We saw your session, and also we're talking about how Bharat Biotech has made established, especially in Kerala, but that was food processing, like you mentioned. But do you envision in terms of biotechnology, because right now Kerala is emerging as a hub?
Right. So Kerala has the right ecosystem for biotechnology. I mean, you don't need, I would say hundreds or thousands of acres of land to set up companies in the biotechnology space. It is related to a lot of R&D, a lot of deep tech. So Kerala has the right ecosystem. It has the people are very innovative, highly talented workforce, and that workforce is there all over the world, creating great opportunities for themselves. I think they need to come back and create the same opportunities within the state. So I think it's not a matter of if, it's just a matter of when. And the current government is thinking about the right policies also to attract new investments and new companies, and also startups. A lot of startups are coming into the ecosystem. So I think the future looks good.
So do you also envision in terms of Kerala being such a small state, can it play a larger role in terms of biotechnology ecosystem across the country?
So I think, when you measure it, when you think about it as a manufacturing ecosystem, there are challenges. But if you think about it as an innovation-driven, knowledge-driven ecosystem, I think 100%. There is a lot of opportunities because the literacy rates are high, but also the depth of literacy is very good. It's not just people who are educated at 10th or 12th grade level. They're much higher educated. And also there's a lot of maturity in the population. There is innovation maturity in the population. That's what we were talking about in the panel.
Can we ignore the fact that, in terms of healthcare, and that's the state?
Right. In terms of healthcare, that's the state. And also in terms of what we are, as a part of Viksit Bharat, 2047, if we need to be a developed country, I think we need to have gender balance and gender parity in all aspects. And I think Kerala has already demonstrated that. They're very, very ahead in terms of gender balance and gender parity. And that's going to take them a long way. All right.
Thank you, Mr. Sai Prasad. Thank you.
Welcome back. Well, the strength in the market continues. So it's been a decent day for the Indian markets and the bulls at least. So UltraTech, Grasim, Wipro, M&M, Eicher Motors, these are the ones which are leading the chart and comfortably above that 23,200. But a stark underperformance from the bank Nifty today. SBI, HDFC Bank, Kotak Mahindra Bank, these are the culprits. And of course, AU Small Finance Bank, which is down almost 3%. These are the reasons why Nifty Bank is languishing in the red. Ajay Vora, the head of equities from Nuvama Asset Management, also joins us on the show. Ajay, what to make of this weakness in some of the financials? The valuations, everyone says, comfortable. Worst, perhaps, with respect to asset quality is over. The competition from MFI sector also has come down. What then explains that people are still not interested in buying some of these financials afresh?
So I think, good afternoon and thanks for having me on the show. I think it is clearly the lack of growth. So if you look at the largest private sector bank which reported the numbers, the NII growth was less than 10%, the PAT growth was around 2%. So I think till the time we don't get clarity on the growth, valuations may look cheap, but I think that is clearly not the reason for someone to get in unless and until we get more clarity on the growth coming in next few quarters.
Saying stay away even from large cap banks, Kotak, HDFC, ICICI, SBI, you're not seeing value anywhere?
So I think, as I said, the value is there, but you saw, a very different reaction for another private sector bank. So you have to pick and choose. My sense is that it depends on the composition of the book. And wherever we are not seeing any major downside in terms of the asset quality because of the composition of the book, or on the other hand, if you are looking at some sort of growth, because the growth rates anyways are no longer the 18-20% which we were used to earlier, that has now come down to around 10-12%. So I think wherever at the top end we are getting the growth, that is something which one can prefer.
So Ajay, from the earnings so far, what is it that you've liked? I mean, somewhere where you thought the earnings or growth visibility is better than what you anticipated, or the stock has fallen a whole lot and is now comfortable given the valuations?
So I think, honestly, the markets have corrected mainly because, there is a complete negative surprise on the growth part. And therefore, so far, the results which have come out, I don't think there is any silver lining to it. Only to some extent, if you look at it, the commentary from the IT companies has been a bit positive, saying that, there has been pickup on the discretionary side. And therefore, there has been some sort of interest over there. Otherwise, not many companies, first of all, have reported numbers so far. So nothing on the auto side or nothing on the, I would say, capital goods side has reported numbers so far. So far, whatever has been the case has been from the banking and IT sector, which again, I would say has been very muted. and in some cases there has been a negative surprise in case of two large private sector banks.
So, if you're saying, Archer, that growth is a bit challenged and earnings have been subpar, what's the suggestion or recommendation right now with respect to investing? Are you telling people to perhaps keep the powder dry and wait for a further correction? Are you asking them to deploy in certain pockets? What would be your advice?
So see, actually, one has to get more visibility on the growth. So when we started the year FY25, we were expecting around 14-15% growth. Now that has come down to almost 4-5%, right? So we'll end FY25 with only 5% growth. Now again, for FY26, we are building in 14-15% growth. So which clarity is much needed, and which we will get over next, maybe I would say 1 quarter or so. So if you look at it, the correction has started from the month of, I would say, anywhere between mid-September to October. So October till March, I would say a period of 6 months is something where the markets have corrected and maybe consolidating right now. So I think maybe another 2 odd months, 2 to 3 months, and we'll get more clarity on the budget side as well. I think another 2-3 months, and we will get more clarity on that 14-15% growth if it is really feasible for FY26. And then if it is looking very much constructive, we are back to the compounding story. So I think that, a consolidation phase is going on. So anyone who wants to invest, I would say that wherever the growth numbers are getting upgraded and you are getting more and more visibility, that is something which you can start investing right now. Or maybe, something like banks, as we discussed, it's in a value phase right now. But you need to have a little bit longer term horizon to invest in banking as of now. So I would say it depends, what is your strategy, but, bottoms up ideas are definitely available in the market.
Cheap, right, Ajay? I mean, you've got to see also the price at which you buy growth or growth stocks.
Yeah, absolutely. Absolutely.
Right. So where is it that you see a balance between growth visibility and valuation comfort?
So I think, see, if you look at cement as a sector and what has happened to the sector over last, maybe I would say 5-7 years, the entire sector has got derated in a very big way. And my sense is that, now if the overall, construction, we are looking at, real estate, lot of launches, and also on the infra side, the demand is likely to pick up, over next 2 to 3 years. And the pricing also, if you see over last 5 years, the compounded pricing appreciation has been less than 3%. So my sense is that there is a lot of consolidation which has taken place in the sector. On top of that, demand has been a little muted so far, which I think is likely to pick up. And because the sector has got derated, I think the re-rating prospects are also there. So I think we are looking at cement as a sector which is more on the constructive side from here on.
As a pack looks interesting, but you talked about real estate and the jury is out on that one because some of the headlines do suggest that the inventory is building up, and anecdotally as well seems like some of the markets are saturated. Would you recommend people to book out some profits because the stocks have done rather well over the last couple of years?
Yeah, so actually if you look at it, real estate has been one of the top performing sectors over last 2 years. And the whole story of the branded players or organized players taking away significant market share from the unorganized had accelerated over last 2 years. My sense is that considering the the million square feet what most of these guys have launched and sold over last 2 years, that is likely to soften a bit going forward, considering how the economy itself is slowing down. And therefore, I think that that sector again will go in a consolidation phase for maybe 6 to 9 months. And then again, it depends how the economy shapes up. Then we can get, more positive on the sector. But I think that considering the pent up demand, which was already there in the system, has got very well absorbed over last, I would say, 2 years or so. And therefore, a phase of consolidation is much needed for the sector from here on.
Okay, a bit of a phase of consolidation for real estate. What about consumption? How are you differentiating that within, let's say, the urban side, rural side, discretionary and all of that? Because even urban is moderating a bit clearly.
Yeah, so clearly, the consumption at the top end is not seeing that kind of, I would say, a major negative impact as such. But obviously, the rural side or I would say the lower middle class, I think the consumption is definitely lagging since a very long time. And that is something I strongly feel that needs to be addressed immediately, at least through the upcoming budget. Because, that is a very large part of the economy. and that is clearly giving signs of complete distress. So my sense is that, because something which has lagged for almost, I would say, 1.5 year, if not addressed now, there can be a serious repercussions to that, because we having speaking to a lot of consumer companies, we are clearly seeing that capacities are getting underutilized. There is no pricing power, and therefore I think that at the ground level, some sort of stimulus is definitely needed in this budget, which can further accelerate this kind of demand at the lower end.
Through Ajay, that consumption bit, or it's not enough. What happens to the fortune of some of these consumption companies? So it's better to just wait it out?
Yeah, I think we are definitely in a wait and watch mode, although the stocks have corrected quite a lot, both on the discretionary side as well as on the staple side. But we are definitely on the wait and watch mode, because if it continues for another couple of quarters, I don't think valuations are still cheap. So we would definitely be on the sidelines right now.
Okay, Ajay, always good chatting with you. Thank you so much for your time today.
Yeah.
Okay, let's just revisit the markets before we move forward. And it's pretty much status quo for the index. We haven't moved a whole lot. It's UltraTech Cement putting on more weight now. It's up nearly 7% on the futures. Coforge higher by 11.5%, 10.5% uptick on Persistent as well. And KEI is holding up 9.25% as we speak. A lot of earnings cheer and a lot of earnings disappointments as well. Here's the slice of all the managements we spoke with.
Pidilite has always maintained that we will deliver double-digit, profitable underlying volume growth. And as you would remember, over a long period of time, we have guided our EBITDA margins in a range of 20 to 24%. Our international markets, we will stay focused in the markets where we want to be, which is in South Asia. We will continue to explore Africa. We are doing building Middle East. So these things will continue.
We believe that we will continue to grow at a rate which is going to be 1.5x of the industry growth rate, with EBITDA margin of a similar pattern of 11 to 13% cable and wire business. And the FMEG business, the EBITDA margin will expand over the next few years and should be able to achieve 8 to 10% of EBITDA margin in that particular business.
FY26, we will grow at least 15 to 16% of total. And demand is good because of all government projects are coming, private industry is growing, solar park is growing. So demand is good, and capacity also we are increasing continuously.
This quarter, we have grown 4.3% on reported and 4.6% on constant currency terms. This is despite of the fact that this is typically a seasonally weak quarter for the industry. We had a furlough impact, and after that adjustment, we have been able to grow at such a nice pace. So we are pretty confident that whatever targets we have set up for ourselves for FY25 and FY27, we are on track, and we should be able to achieve that.
Don't solve for margin every quarter. We want it to be stable in this range of plus minus 1% of 15%. And this is what we are getting. So if you look at BFSI, then year over year, they have done tremendously well for us. And this is the only quarter in the last 7-8 quarters that I've seen them decline even slightly, and that too primarily because of furloughs.
Okay, those are some of the stocks which are doing well. Syngene just came out with its earnings a few minutes ago and does look like it's managed to meet the street expectations, or at least the street is rewarding that one because that's managed to shot up a bit. I'll just try and kind of get more details on the numbers because overall the expectation was that pharma sector is likely to report good set. I think 130 crore is what they have done on the net income side. The expectation was around 140, but overall the revenue has been stable at around 950 crores. So that's the reaction as far as Syngene is concerned. And pharma as a pack is doing well. Suven Pharma is the other one. We should pull up that one. Mankind Pharma is doing quite okay. Kunal, from this pharma pack, I mean, after that big rally that we saw last 15-20 days, these stocks have gone silent. Time to accumulate?
Yeah, I think some of them, large cap names especially, I think Sun Pharma, for example, over the last few days has been showing very good price action. Then compared to that, Lupin is also trying to just about, make a base, especially around the longer term moving averages, closer to that, 2000 mark. You've seen Dr. Reddy, which has been a big underperformer. That's a chart which is still looking a bit wobbly because the stock from those 1400 levels, 1430 or 1380 thereabouts, I think formed a resistance, and from there the stock had corrected very sharply. And post that, it's not been able to recover, even at a point where many of these pharma stocks over the last few days has shown some bit of recovery. So that could be an underperformer of sorts. The concern for the pharma sector would also be from the mid cap end, because the likes of Zydus, Glenmark, etc. These stocks had a fabulous 2024, or at least the first 7-8 months of 2024, where these stocks moved up almost from 400 levels to 1000 plus 1200 mark. And now these stocks have come back to that 1000 to 1200 levels respectively. So my sense is that potentially you might expect many of the mid-cap pharma stocks to try and remain into a more of a range as well as underperform. But I think large-cap pharma stocks, Sun Pharma, Lupin specifically, I think they would be very strong buys even at current levels.
That's the tea coming in on the pharma pack today. Of course, all the stars are within the IT space, though. And then, of course, there are names. There are a few names like Eicher Motors, Tata Motors, M&M. These are also pockets which are holding out. What's Unilever up to? That also should be reacting to its numbers and that acquisition that they made. Unilever will just come off for you on your screens. It started off in the red, has covered a little bit of lost ground, but still pretty much tempered. Tata Consumer, though, on the other hand, that's holding up a good 2%. Naresh, anywhere within the FMCG pack where you think the selling could be overdone?
Could be Britannia, which has made a good base and it has corrected from 6,500 all the way down to 4,700. This is where it was back in March of 2023 as well. And over the longer run, it has done really well in terms of an outperformance. So for now, it has made a base around 4,700, 3-4 bottoms around this area. So this could be the one which could bounce back towards the 5,400 mark going forward.
Let's get in some BTST trades as well then on that note. Kunal?
So I'll go with two buy calls. The first one is on Bharat Dynamics. That's a chart which is looking attractive. It's come back above its 200-day moving average, just about the 1230-40 mark. So look out for targets in the range of 1340, stop loss at 1250. And the second is on Karur Vysya Bank. That's a chart which is heading towards a very strong candlestick breakout about 230 levels. So buy with a target of 242, stop loss at 225.
Right. Naresh, what about your BTST ideas?
So first would be a brand Ramco Cements, which has seen a decent enough correction and today making a reversal with volume, stop loss at 900, target price of 930. Second is a sell on CG Power, which saw a bounce back, did not sustain well. It could break the recent lows as well. Stop loss at 633, target price of 610.
Some of the BTSC trades coming in from our technical experts, but we are also watching out for earnings of Shriram Finance. Let me take it across to Varun to get more details as to what the street expectations are. Varun?
Well, so we are expecting good growth from Shriram Finance. The company has been performing since last few quarters and the good performance will continue in this quarter as well. We are expecting the NII to grow by around 13.6%, the PPOP to grow by around 12.5% and a good profit growth of around 31.7%. The profit is expected to come at around 2,625 crores. Now, some analysts on the street are also expecting capital gains, which would actually boost the overall profitability of the company. If you look at the AUM growth, it is expected to be at around 18 to 20%. The overall cost of borrowing is expected to peak out. And if you look at the OPEX growth, it is likely to be modest. The margins might dip around 4 to 5 basis points, not more than that, because in the past, if you look, company has kept its margin trajectory intact. Also, look at the credit cost. It is expected to be around 2.2% in line with the previous quarter, and also the gross NPAs and net NPAs, if you look at them, they are expected to be stable. Look at for the management commentary, especially on the AUM growth, credit cost, also competition arising in the overall gold loan business, and most important, the microfinance business. How is that panning out? So overall, if you look, the results of Shriram Finance, they are expected to be good.
Okay, so that's about Shriram Finance, but defense as a pack has also got an active. Bharat Dynamics today is in focus. Mazgaon Dock, of course, that 70,000 crore MOU that was being talked about. Kunal, on the defense pack, anything coming in the buying zone?
Yeah, I think Bharat Dynamics is something which is looking attractive. The stock breaking past above its 200-day moving average. But I think more importantly, it's the candlestick pattern today, because the stock has managed to engulf the candlestick pattern on the negative side, which was there over the last 2 days. And specifically the stock coming back into that 1300 breakout mode, which I also believe is a strong psychological breakout as well as a previous resistance breakout for Bharat Dynamics. And from the other pack, the likes of HAL, BL, yes, these stocks have been underperforming, but somehow it looks like that these stocks are now forming a potential bullish RSI divergence, where in price terms these stocks have been making new lows, but the RSIs have actually been starting to make a higher low for themselves. So that could probably indicate that we are nearing a bottom formation for many of these defense PSUs. So I think HAL at 3,800, 900 levels looks very attractive, and BELs closer to that 270 odd mark I think is also something which traders could look at a contra buy.
Okay, so that's the defense pack and how it's active. What could be the buys? Bharat Dynamics looking good as far as charts are concerned. But separately today, the EMS theme, I beg your pardon, is bouncing back. So Amber Enterprises, Dixon Tech doing quite okay in the trading session. You also have SIAT actually, which is up around 4.6%. Century Textiles doing well. Of course, cement as a pack has been fairly active. Let's take a look at the losers as well. So apart from banks that continue to languish, Ramakrishna Forgings is down 5%. Vardhaman Textiles, PNB Housing, which had shot up yesterday post its earnings, is under pressure today. In fact, if we do have, let's play out some of the sound bites of the management chat we had with the management of PNB Housing, because they talked about how their book has been much better than rest of the peers. But the big question everyone was asking is whether this is going to be sustainable or not. Maybe we can play that sound bite to help you understand that. Yes, we can hear out what the management told us.
In terms of demand, irrespective of the segment, whether it is luxury, super luxury, or in terms of mortgage segments, super prime, prime, emerging and affordable, demand is quite robust. So we have a plan of exiting slowly, slowing down prime for next 3 to 4 years time. So the plan is very simple. We want to focus more on affordable. Today the book is 3,838 crores. We want to get to 5,000 by March. We want to get to 15,000 crores of affordable book by FY27. Today the emerging book is about little over 13,000 crores. We want to take it to 25,000 crores by March 27. The overall retail book is going to be 1 lakh crore. Even in March 27, the prime is going to be 60,000 crores. But if you look at Q3, Q2 of this year, we have slowed down the growth rate in prime. Going forward, our growth rate in prime would be in single digit, maybe 9%. Emerging would be about 20+%. Affordable, the book is small, but we plan to reach 5,000 by March, maybe next year close to 10,000, by FY27 15,000. So that's our plan.
Okay, that's the word coming in from the management of PNB Housing. But on that note, let's take a look at what our trading session has panned out to be like today on the Nifty front. Not much has happened. We did see some uptick coming in the first half of the day, but we've simmered down all of those gains. A 0.2% cut coming in on Nifty right now. Sensex also 0.1% higher in trade today, but not much is happening over there. We seem to be above the 76,500 mark for now. Nifty also, remember, we slipped below the 23,200 mark, but we're back there now, at least for now, looking good. Advance decline ratio slightly in the favor of the advances, but rather even when it comes between both of those. Let's take a look at Nifty Bank, because that was the index that was immensely under pressure in today's trading session. And Nifty Bank 0.3% cut coming in. Remember, it was the biggest loser in yesterday's trade as well. It's the broader markets that have continued to shine in today's trading session. They took a big cut yesterday. They have found their ground once again in today's trade. Nifty mid cap up almost 2%. Nifty small cap also not further behind, a 1% uptick coming in on Nifty small cap, making Nifty mid cap the top sectoral gainer when it comes amid the benchmark indices. Let's take a look at some sectoral gainers and losers in today's trade. Nifty IT is your top performer in today's trading session, held on to by the likes of Coforge, Persistent. Very good set of numbers coming in from both of these companies. These stocks were seeing double-digit uptick coming in today's trading session. Dixon is something that has done pretty well as well. And on the second sectoral gainer today, highest is Nifty Pharma, followed by Media, Auto, Realty, Metal, FMCG, Energy. PSU banks have been dilly-dallying around the red and the green over the course of the day, so rather flat moves coming in on that index. It's the Nifty Bank that has been tanking away in today's trading session. Some stock-specific action then to watch out for. Watch out for how HUL has acted in today's trade on the back of its numbers that came in yesterday, along with HDFC Bank. Muted for HUL, and HDFC Bank also under some slight pressure, giving away its initial morning gains. The likes of Coforge, they've done well. That was up 12%. BPCL was seeing some pressure on the back of missed earnings estimates. Zensar Tech was up and above in today's trading session, roughly 13% higher or so. Polycab also did well. The entire auto pack, Jeffries, on the back of his Jeffries note coming in, M&M, Eicher and TVS Motors. Aurobindo Pharma was doing well along with Dr. Lal on the back of a CLSA upgrade coming in. And lastly, Biocon was in focus because the board will be mulling fundraising on the 27th of Jan. That's all the news flow, all the important stocks to highlight in today's trade. But that's how we're summing up on the Nifty today, shutting shop above the 23,200 level.